This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, June 14, 2026, and this is the After Hours session. Now, let's get into it. The market is caught in a tug-of-war between fading macro optimism and crypto's stubborn resilience. With the S&P 500 flirting with all-time highs and Bitcoin holding above $65,000, the question is this a calm before the storm or a signal of real risk-on rotation? The week ahead brings a key Fed decision, a tech earnings wave, and a crypto flow that's anything but settled. We're starting the week with Bitcoin at $65,346, up 1.4% from yesterday. Ethereum is higher by 2.38%, but the broader crypto market is still in a 21% decline phase. The Fear and Greed Index is at 14 extreme fear, but the VIX is at 17.68, down 1.76 from Friday's close. That's a classic divergence. The market is scared, but the volatility isn't screaming yet. Key levels to watch: Bitcoin's $64,000 support, Ethereum's $1,700, and the 200-day moving average for the S&P 500. The gap from Friday's close is 0.3% on the S&P, but it's a non-directional gap. The market is still trying to find its footing. The macro story is still about the Fed. We're 2 days out from the June FOMC meeting, and the market is priced for a 25 basis point rate cut. But the real question is whether the Fed will signal a full reversal of its tightening cycle. The 10-year Treasury yield is at 4.45%, down 0.2% from Friday. If we see a 25 basis point cut, that could be a catalyst for a risk-on rotation, but only if the Fed signals it's done tightening. The key is the dot plot. If we see a majority of officials pointing to a 25 basis point cut, that could trigger a broader market rally. But if the Fed stays hawkish, we could see a continuation of the current bearish regime.
From a technical standpoint, the S&P 500 is sitting above its 50-day moving average at 4,472. But the real key level is the 100-day moving average at 4,420. If we break below that, we could see a retest of the 4,350 level. For crypto, Bitcoin is still in a consolidation phase. We're seeing a bullish flag pattern forming on the 4-hour chart. If we break above $67,000, that's a strong signal that the bearish trend is over. But we need to see a close above $66,500 to confirm that. Ethereum is also showing a similar pattern with a potential breakout above $1,730. The key is volume. If we see a spike in volume on the breakout, that's a strong signal.
On-chain flows are still mixed. The Bitcoin network hash rate is at 195.3 AH/s, up 0.8% from last week. But the average transaction fee is still at $1.13, down 1.3% from Friday. That's a sign that the network is still underutilized. For decentralized finance, the total value locked in the top 10 protocols is at $11.20 billion, up 2.1% from last week. But the most interesting story is the rise of tokenized bonds. We're seeing a lot of activity in the Bitfinex ecosystem. If that trend continues, it could be a major catalyst for institutional adoption. But the real question is whether the market is ready for that kind of movement. We're still in a bearish regime, so even a small positive signal could be overinterpreted.
The biggest risk here is the Fed's communication. If we see any hint of a pause in rate hikes, that could trigger a massive short-covering rally. But the market is already priced for a 25 basis point cut. If the Fed surprises with a 50 basis point cut, that could be a problem. It would signal that the central bank is worried about the economy. But I think the Fed will stay cautious. Another thing to watch: the 10-year 3-month Treasury spread. It's at 0.7%. down 9.9% from last week. That's a warning sign. A flattening yield curve usually means slowing growth or a recession. If that spread drops below 0.5%, we could see a full-blown bear market. But I think the Fed will act before that happens.
The big picture is that we're in a transitional phase. The macro environment is still risk-on, but the market is still in fear mode. The Fed is the key. If they signal a pause, the market could rally. But if they stay hawkish, we could see a continuation of the current bearish regime. The crypto market is still in a consolidation phase, but the technicals are starting to look more positive. The key is whether we see a breakout above $66,000. If that happens, it could be the start of a new trend. But I'm still cautious. The macro environment is still too uncertain for a full-blown risk-on rally.
The Fed is the biggest catalyst this week. If they signal a pause in rate hikes, that could trigger a risk-on rally. But if they stay hawkish, we could see a continuation of the current bearish trend. My call: SPY bearish, target 4,420 by Friday.
The S&P 500 is sitting above its 50-day moving average, but the 100-day is the key level. If we break below that, we could see a retest of the 4,350 level. For crypto, Bitcoin is in a consolidation phase and the 66,500 level is critical. If we break above that, it's a strong signal that the bearish trend is over. My call: Bitcoin bullish, target 67,000 by Friday.
The on-chain data is mixed, but the decentralized finance TVL is still rising. The tokenized bonds are a big story, but I'm not sure if the market is ready for that kind of movement. The key is whether we see a breakout in the Bitcoin price. If we do, that could be a major catalyst. My call: Ethereum bullish, target 1,750 by Friday.
The biggest risk here is the Fed's communication. If we see any hint of a pause in rate hikes, that could trigger a massive short covering rally. But the market is already priced for a 25 basis point cut. If the Fed surprises with a 50 basis point cut, that could be a problem. But I think the Fed will stay cautious. My call: SPY bearish, target 4,420 by Friday.
The big picture is that we're in a transitional phase. The Fed is the key. If they signal a pause, the market could rally. But if they stay hawkish, we could see a continuation of the current bearish regime. The crypto market is still in a consolidation phase, but the technicals are starting to look more positive. The key is whether we see a breakout above $66,000. If that happens, it could be the start of a new trend. My call: Bitcoin bullish, target 67,000 by Friday.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Crypto markets are highly volatile. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.